Hello friends, myself Ashvin M Maheshwari, working as lecturer in Electrical Department, Government Polytechnic College, Dahod. In this video, we are going to know about the payback period for any energy conservation project. What is the payback period? The length of time required for an investment to recover its initial outlay in the terms of profit or saving. In simple word, we can say payback period is the time to recover the investment. As a technique of capital budgeting, the payback period will be used to compare projects and derive the number of years it takes to get back the initial investment. It is a simple calculation of a time for the initial investment to return. Means in payback period, basically we are calculating the time. Suppose I am investing certain amount for a particular energy conservation project today, then within how much time period, whatever my capital investment that I will get back. So that time period is known as the payback period. While we calculate the payback period, then we ignore the time value of money. Here the doubt comes in mind, what is the time value of money? Time value of money means that a rupee today is more valuable than rupee tomorrow. For example, suppose I have 100 rupees today, and if I will keep this 100 rupees in a bank for a 1 year at the rate of 5%, then at the end of 1 year the amount will be 105 rupees. But whatever the 100 rupees today I have, that is more valuable than 105 that I have at the end of 1 year. Understood, friend? What is the time value of money? Okay. We use the formula to calculate the payback period. That is initial investment divided by the net annual cash flow. Now, what is the initial investment? Initial investment means it's the capital cost minus the scrap value. Now, what is the capital cost? Capital cost means the cost that we are paying when we purchase any equipment. And what is the scrap value? After the useful life of any equipment, whatever the amount we get when we sell it, that is known as a scrap value, or we can say it as a salvage value. And what is the net annual cash flow? Net annual cash flow means it is the yearly benefit minus yearly expenditure. Suppose that I have installed the one solar rooftop at my house. Whatever the amount I invest during the installation of solar rooftop, that is known as a capital cost. And suppose the 25 year is its useful life. So at the end of 25 years, when I sell all these things, then whatever the value I get, that is known as a scrap value. Now what is the yearly benefit? Suppose that there is a saving in my light bill per month. So whatever the saving in light bill per month multiplied by 12 months, that is my yearly benefit. And yearly expenditure means whatever the maintenance charge that I have to pay to maintain this solar rooftop, that is known as a yearly expenditure. The net annual cash flow is also known as the net annual saving. The second term that is related to payback period, we can say it is return of investment. It is the annual return as a percentage of the capital investment. Means annually how much profit I gain from the particular energy conservation project with respect to the capital investment, that is known as the return of investment. Return on investment is the ratio of net profit to cost of investment. As a performance measure, return on investment is used to evaluate the efficiency of an investment. Means how much efficiency of your investment possess. Suppose I am gaining 25% profit from my investment, then I can say return on investment is 25%. The return on investment can be considered into two ways: the negative return on investment and the positive return of investment. The negative return of investment means investor lost money, means there is a loss whatever the capital investment, and Positive ROI means there is a gain on investment. Return on investment normally expressed in percentage. Here you can see the formula for the return on investment, that is net income divided by capital investment multiplied by 100. Why multiply by 100? Because it expressed in percentage. And here net income means gross profit minus expenditure. It can be seen from the above formula. The return on investment is nothing but it is the reciprocal of payback period that we have seen in the first slide. So we can say return on investment equal to 1 divided by payback period multiplied by 100. 1 divided by payback period multiplied by 100. So by this formula we can calculate the return on investment. Now how to calculate the return on investment and payback period, that we can try to understand through this example. Here the initial cost of one energy conservation plant is rupees 12,000. At the end of useful life, that is 10 years, the scrap value is rupees 2 lakhs. The annual income from the energy conservation project is rupees 3,50,000 per annum, and annual expenditure is rupees 1 lakh. So first we have to calculate the net investment. So net investment means initial value minus scrap value. So initial value is the 12 lakh and the scrap value is 2 lakh. So we can say the net investment is rupees 10 lakh. After calculating the net investment, we have to calculate the net annual saving. The net annual saving means annual income minus expenditure. Here annual income is 3,50,000 and expenditure is 1 lakh. So we can say the net saving is rupees 2,50,000. Now what is the payback period? Net investment divided by net annual saving. So in step 1 we have calculated net investment, that is 10 lakh, and in step 2 we have calculated the net annual saving, that is 2,50,000. So 10 lakh divided by 2,50,000 we get 4 years. So for this energy conservation project, whatever the recovery time, that is of 4 years, means within a 4 years we gain our capital investment. Now what is the return on investment? So return on investment is nothing, it is 100 by payback period. So payback period is 4 years, so 100 divided by 4, so it is 25%. So friends, now you understand what is the payback period, what is the return on investment, and how to calculate the payback period and the return on investment